Tuesday, another trade breakdown. So, for those of you that don't know, the members of the Discord pick one of the trades that I took and they asked me to do a trade breakdown. I do one trade breakdown per week, and we do a lot of other videos also. But on Tuesday, it's the trade breakdown that I film. So, the pair that has been selected this week is Euro USD, the buy that I took. So I'm going to be explaining completely my thought process and everything about this trade. All right. So it depends on how it goes and how I feel. Sometimes I go in bar replay, sometimes I don't. But for fun, let's go in bar replay for that particular day. Okay. So remember, you wake up in the morning, let's say you trade London. Your goal is to identify. Sorry, I'm drinking my protein shake. I just got back from the gym. So your goal is to identify the actual structural expectation from the market. Like we saw that last week. You need to identify the tradeaways. You need to identify also the structural expectation. And that's what you need to do just before you go into marking up your liquidity and starting your day. Very important, like we said in the exam, you need to look on what happened while you were asleep, right? As you guys can see, we are actually trading away from this liquidity, right? I say liquidity, but you guys already understand is we're trading away from that inducement, right? As you guys see, if we zoom out, still on the M5, we were building clear bias side liquidity here, right? Making new structural highs, lower highs and higher highs, right? At this point in time here, we had what we call the first structural shift, right? At this particular moment, the structure has been switched. And as we can see, this high has been protected. And as we know now, this one is protected. So the structural expectation, right, would be to continue lower, right? Target the neck structure, right? A lot of people confuse the structural expectation and what the actual market does. Let's do a little recap of what is structural expectation. Market is doing higher highs and higher lows, right? At this point here, when price pauses, like let's say you're trading this is your current session. Most likely, the best possible scenario is that the price will do a new high, right? That's what we call a structural expectation. Is when you're here, let's say this is a daily chart, and this is your, let's say, your Asia session, you obviously expect price to like continue higher, right? Based on this internal structure and those structural legs. Expectations and reality is two different things. A lot of people want to flex on social media and say that structure doesn't exist. It's actually wrong. Structure does exist because retail traders and a lot of people look at it, and even me, as being relevant, right? It just makes sense for the impulses to be constantly with the actual trend, right? When there's a structural shift, it doesn't mean that there's a trap. A lot of people confuse the structural shift and the traps. Yes, the market traps retailers with structural shift as FBOSs, right? But that doesn't mean that we're switching the structure, that it will immediately create a trap, right? That's very important. Now, as we can see, I don't particularly use a higher time frame, but I see a lot of members starting using it. So if you guys don't mind, let's go and zoom out in higher time frame. Okay, we can even go in H1 if you guys want. As you can see, this point led to this high, right? Let's go with the dots. It's going to help you guys. Here we go. Let's put the red colors, right? Here we go. This one led to this high, right? This one was above this one. So this means that this one is the next structural leg, right? And you can see this one went above this one. And as you guys can see now, we're building our structural leg, right? Everything in between these are internal. So let's say this here, you can even mark this as being a relevant structure, as external also, but I think it's just a little bit too much pulled up by the hair. We understand that right now, the legs are buy side, right? This one can be also accounted as an internal if we want. Remember, our goal is not to pinpoint precisely what happened in the past in terms of internal or external. So let's remove the red. The blue ones are internal structure, right? But we understand now that this point, the structural expectation of this was this, right? Let's even include, if you guys don't mind, the internal one. And the structural expectation was that price does this, right? That this low here is protected. That's not what happened. Price closed below. This means we have an indication of a structural shift, right? So what this means also is that we can now actually identify even more structures, because now if price actually closes below, we can now start marking up those ones, right? And this is the actual structural legs because they're being printed. When we have more development, we can adjust them. Now let's remove these scraps and let's start building, right? So now, naturally, when it comes down to a structural shift, price, this is the first structural shift. It doesn't mean that there's a trap. This means that potentially price will start creating those lower or downside structure. Our goal is not to predict those, is that we have an understanding of what could potentially happen. Too much people in the market see inducements left and right and don't really understand the actual heartbeat of the market. Okay? So enough of the pre-market analysis. I usually do this in 25 seconds, but I think it's a good practice to have, and this is part of your due diligence, right? So let's start the day. Okay? As we can see, coming out of Asia, inside of Asia, we have clear sell side liquidity, right? Actually trading away from this, respecting this direction. But now coming out of Asia, we have what we call a buy side liquidity being built, right? Nothing too relevant, just clear new structural highs. I don't see any clear retail traders entering. Maybe this, we can even account this one here. It will make more sense if we want to account this as a structural leg to buy. This is actually possible, but the actual pulses of the market are not so clean to entice anyone, in my opinion. Okay? So again, we just push price. There's nothing happening right now. Remember, our goal is to identify inducement and enticements, right? Two different things. Now we can see price is just playing, and now we have maybe a little bit more buy side liquidity being built, right? I didn't mark this one as you guys see here because I just think it's completely irrelevant. Okay. So now first thing to do is always see what was that inducement at Asia high, right? Asia high has an inducement. First thing to do is what? Like we said in the exam, we look to the left. Okay, we have this in the invalidation shield, pretty irrelevant, right? We don't have clear liquidity here because we understand that there's nobody entering here, right? So most likely the reaction to this will potentially just be to induce more break and retest traders, right? Nothing as a reversal. And this is the proof of the understanding of the liquidity. It's not because we have an inducement of Asia high that there's automatically liquidity here. We have our invalidation shield. There's no relevant liquidity. Now, some people could say, okay, but Joe, we have this here, right? Yes, you are right. Remember, this is a structural leg. This becomes relevant liquidity. But remember, what is the current trade away? This is here, right? So let's remove this. For me, this is completely irrelevant. And potentially even this structural push here could have just have maybe a little bit of liquidity here, and the justification of that pullback here to go back into the decisional most likely was the catalyst to continue higher. These notifications here are too soft to properly have a good read, and in my opinion, it's just completely irrelevant. We want to have structural inducements. We want to have these things here, right? So let's continue. Now we have price pushing. Let me just put a line here because kind of blind. This is a type of things that I like, right? When it comes down to false reaction, and we'll have a video about it, false reaction is often into previous structural points, right? When there's either a structure, equal lows, equal highs, and there's a reaction, and we even entice them down, this indicates automatically an indication for them to enter, right? The rejection of that point actually triggers sell side alerts, right? And this is completely normal. We've talked about it. Now, let's just check real quick. What do we have here? Remember, when you have this pull and overextended price action, let's just confirm and justify where it's coming from, right? With this structural push here, let's check here. What do we have? We could potentially be in this decisional zone. That's a possibility. We could maybe mark this up here, but most likely, remember, we're still trading away from this point, and as of now, with this structural low, this point is protected. So it doesn't matter if price does this, even this, and continues. As long as this point is protected, we have our confirmation that price will do the structural expectation. Okay. So now we have our first, again, intraday false breaker structure. Okay. This is an intention false breaker structure and also a clear SMT based on those equal highs and the enticement low. So this becomes our first FBOSS, right? Very, very clear. As you can see, we have clear buy side liquidity being built. Relevant point here, right? Very, very important. This has now relevant liquidity. This made a new low. Not really. So this actually, it's a point I don't like. But what I like here is the false reaction. These are one of my favorite setup when it comes down to build a buffer, right? Because you know that this rejection actually is enticing them to enter. Most likely you will have potentially a buy opportunity. So let's see what price does. And I think that it just came back, mitigated this imbalance POI. It hasn't, so it actually just filled the actual imbalance. This is, oops, let me just zoom in here. God damn it, that's a little bit. God damn it. Okay, that's even better. And remember, identification of imbalances with our indicator doesn't mean entry. It means justification, right? Because for me here, there's no entry, but there's a justification. Now we understand that we finally have a relevant inducement high. With that liquidity here, structural point here, hasn't made a significant low. I don't like that. Remember, this is the type of things I've showed you and I repeated myself multiple times. You want clear structural push to confirm that we have the masses here. Otherwise, this is purely speculation. You don't know if there's relevant liquidity here. And this is most likely just a regular structural point, especially with the time. As you can see, the time, it's a past London close. So this, in terms of volume and liquidity, it's not so relevant. Okay, so let's continue. Here, this is an identification of an FBOSS, but as we can see, this is clearly an internal structure. So you can label this as a IFBOSS, even though that little point made a new high, but you could understand why we could label this as an IFBOSS, because the actual leg is very, still very obvious. So I think I prefer to put it IFBOSS. Remember, the difference between an IFBOSS and an FBOSS was labeled for you to understand the difference in the weights between both of them, not to actually argue if it's an IFBOSS or an FBOSS. You would understand that a regular FBOSS with a valid structural leg weights a little bit more than an IFBOSS, right? So this is important. Now, let's continue. Usually, I would have. I think this is where it happened. What time? I wasn't awaking. I wasn't awakened yet. So let's see what happens. See if price pushes. Now we have that decisional zone here, right? That this is also an alert, important alert. And let's go. Now we have new entries here. Sorry, I'm getting ahead of myself with relevant liquidity. All right. So let's continue. Again, at this point, there's no trades. Our goal is really to take shorts because we are still, if we go back, we're still in the structural expectation. We just don't know where the structure will stop, right? But until we have a potential reversal, it's either the imbalance fill, that structural decisional point, this point here after that SMT, all buys are still valid because we are in that actual pullback to create that structural leg to the downside, right? And it would do actually this, right? Remember, the internal structure and the external is two different things. It's very important. You need to label those. You need to see those. And some of the members use this tool, like the red one. You can use it, right? And internally, everything internal to these would be, let me just modify this to blue, would be the blue one. I just don't want you guys to be like married to these little points, right? And remember, this makes a new low here because this becomes the red because it made a new low based on this one, right? Before, when the price was playing, this was the red. But now we have more price action development. So we edit, right? You cannot predict the future, but you can adjust your markups. It's very important, right? Okay, so let's remove this line because it's irrelevant. And let's continue. So up until we have a relevant reversal point and we have an indication of reversal, most likely there's nothing for us to take shorts out of. We're still in that pullback, so you can take buys at whatever moment when an entry is given to you, okay? So now we have that decisional zone here that made a significant low, also induced that daily low, and that caused the structural shift. This push here that we had, that those fake reaction, right? I'm getting, again, excited. I'm sorry. I just really love this. You see those false reaction here. you have that push here. Then it induces them, and first of all, they enticed them to enter. We're taking the liquidity here. So this is the decisional push that led to that structural switch, right? So it's very important to mark this up as being relevant. This leg here actually was the one that engineered the structural push. So when I woke up in the morning and I actually saw this, actually holding, you'll see, I had a really good indication of the relevance of the liquidity in that place. Okay? So let's continue. Now we have, again, that structural low, right? This is an indication of also our internal false breaker structure without really any indication other than potentially you could identify this as being a trap. I don't like that zone. I don't think it's clean. I think it's just reacting to that structural leg, that internal structural leg. Don't get excited. So most likely, when this happens and I'm trading live, the two things I do is I put an alert here and I put an alert here. That would be the valid FBOSS as the actual leg itself, right? False reaction coming back to continue higher. Or this is the internal false breaker structure that has enough to continue. And this is where things get interesting. You want to identify those IFBOSS. You don't want to trade them. You want to identify them. If there's indication to enter, so let's say something here like this, whatever, then you could enter. Remember, identification of a false breaker structure and identification of an entry is two different things. You can be right about a direction, but wrong about a trade. So it's very important to slow down when it comes down to taking an entry, please. Okay, let's continue. Those structural, those vector candles, those pushes indicates what, right? Manipulation. We know. We get interested now. Very, very interested. So you have your alert in place. You get excited. And you see this, right? This here is what gives it away. Look how, again, they fake the reaction. They engineer those seemingly equal lows reacting to the liquidity here. This is very important. The candle behavior, oh, sorry, I had my mic. The candle behavior and the candle sentiment cannot be done in bar replay. But look what happened here. It's exactly the same thing than here, right? The liquidity resides now above because we create that false, right? False breaker structure. Taking the liquidity. So now, I got excited. And this is the proof I love trading. I just get so excited when it comes down to marking up all this that I forget to do even my own due diligence, right? Here we go. So we have now taking the liquidity, right? And we also have that false reaction of this structural leg and relevant structural point also because it led to the new high. Engineered by the decisional, and price could just dump from there, right? It's very, very probable. Now, you have the clear false breaker structure. Now we have, remember, the elastic band. I've explained to you guys oftentimes what is the elastic band. We have that release of liquidity. Taking this here, right? We could even argue that most likely maybe these guys that entered here that push it higher decided to move to break even. So this is also a justification of also some of the evidence we can understand that why it reacted from here and not taking here, this here. It's very probable, but that's not our point. That this point is not currently taken, it's not my problem. This candle here indicates the release of liquidity, right? Very important. Now, as you can see, price comes back, perfectly mitigates this point. Again, this is not here, as you can see, these are equal highs. As we can see, we can go back in one candle. These are equal highs. It's not considered a relevant breakout structure after that off FBOSS. So let's identify this as an FBOSS. And again, if we see intention-wise, daily, like intraday, the FBOSS is with the actual intentions. But we are still in that actual complex pullback of that point here that I already said here, right? So buys are still probable, buys are still valid, and look very good as of now. This is something also that I will explain in the future when we have those kind of equal lows, equal highs, and there's a reaction and it comes down to that POI. Usually I never take this because this is often going to take this and then continue maybe, okay? Or when there's equal lows like this and there's a reaction to that POI, oftentimes I want to see that intention lower, so I don't want to enter here. So when it comes down to my entry, I'll explain exactly what happened. Now we still have that valid structure here, right? This is equal highs, but also the relevant breakout structure on the M5, right? See, we have that clear elastic band. And now if price is in a protected low, we made a new high. We confirm potentially the protected low, that false breakout structure, that SMT, that clear liquidity. And now we also have that decisional zone that is also in the same idea. Remember, that push to the downside hasn't induced anything to the left. So our indication is that price continues higher because there's no structural inducement to the left. We have this point here, but we identified it was irrelevant because it hasn't made a significant low. We want to see this here. This is a significant high. I'm not saying that nobody's entering. I'm explaining that our goal is to identify where the masses enter. When we have a clear vector candle, we have no doubts that people are buying. Here, do you think that people are buying here and price just plays? No. We want clear evidence. Our goal is like being detective, understanding the evidence to put in place a proper plan. Okay, let's continue. This video is going to take forever. I'm very sorry, guys. As you can see here, and I'll show you exactly how I entered in the 30 seconds. Usually, when price makes a new high and there's a decisional zone here, oftentimes it can leave, okay? And this is something also oftentimes that I miss. But when you go down to the 30 seconds, okay, there is a slight, again, everything I teach you in the shelter is based on my current market experience, my current knowledge, and how I trade. I invite you to do your own due diligence. I'm not saying that this is how the market works, but for me, this is how I'm able to get those precise entry is with the practice, and those evidence that I labeled. I saw that we had still that mini imbalance here. So when I saw price leave, I said, okay, let me just put an alert above below here and we'll see, right? And now price come back. And this is usually what gives it away. When a price jumps like this, usually there's an indication that potentially I'm going to get interested. When you're in 30 seconds and candle jumps close to entries, it's a good sign. And I'll do a video specifically explaining how to enter in the 30 seconds also in the next couple of weeks. You will actually know how. And now, as you can see, we still haven't entered. And this is where it's unfortunate that you cannot have this on bar replay, and we actually miss this. When there's this candle here, this is how it closes. That candle here, as you can see, it actually jumped. This is not supposed to open here, right? When there's this jump and it started engulfing higher, as you can see on 15 seconds, here that jump, this is where I get in, that little bit of spread, because I entered with a little bit late trigger, but it's okay. And this is the actual entry. Those jumps will be explained. Don't worry, calm down. Don't get too excited. So as you can see, we have that imbalance that has been seen here. As you can see here, I marked this one here. Let me just see if I can mark it. Very slight, but still there as, remember, justification, right? Our goal is to justify that there's still remaining possibility to go lower, right? And also, entering that decisional zone here is really not wrong. But the problem is people want to enter that decisional zone and they want to put their stop losses here. Like, don't be cocky. Cover the damn low, right? Don't do like me, okay? Cover the damn low. So now, again, where's our M1, M2, M3? So M1 was clearly here, right? M1, M2 was at the SMT, taking a little bit of money out of the table, and M3 was at the decisional zone. And during this trade, I was in a live trading session with a student. It took forever for that trade to play out. The break even, the M1 was perfect. It took 5 minutes. But look at the horrible PA. I even took a break even here because I tried to re-enter here at this point here, at this decisional of that false reaction. And I entered here to target the same thing. And I instantly got break even. It's all good. And look how price, I think it took like 45 minutes, let's see, before it starts pushing. It took like 2 hours. Like, that trade was clearly not worth it. But it's just to show you that they were constantly creating false reaction out of that POI. Remember, you guys should know already what this is. And as you can see, the trade played out. I closed everything over there. And this is where it's very important. Let's say that you don't close your trade here, and you see that you have a relevant liquidity taken, and that you see an entry to the opposite side, like this, right? You close your damn position. I don't care if you're running at $90,000 of profit. You take either your partials or you close your position. Reversal behavior based on relevant liquidity that engineered the whole structural shift. A lot of people, very new traders, say that this is not a valid structural point, it shouldn't reverse from there. Remember, the price action is read from left to right, not right to left. You need to see what engineered this move. The relevance of this push is very important. Very, very, very important. And as you can see, it's very important, right? So now you have your potential reversal. And I already closed the trade. We had a lot of students that took this short. And now, as you can see, there's those structural push here. We have the relevance of the liquidity now here on those equal lows. Let's close this, close this, close this. And we even have this structural leg here that actually has liquidity based on that structural high here that you can even mark here, right? These two are used as the same entry and constantly offering other opportunities to short, and the price just calmly closes the liquidity and leaves the PA as like that. And if we check on the higher time frame again, like I said, I don't trade a higher time frame, but as you guys can see, we are still using the same expectation to go lower, right? We said that this point was the trade away. Now this point becomes the trade away. On the intraday, that was the trade away. And this point here from that decisional zone. But if we remove those arrows and we just keep the two relevant ones to the downside, our structural expectation has been perfectly respected and making a new low, right? That structural shift is now confirmed. And now the expectation is the same thing. Let's play price. As you guys can see, oops, it closed below this point also, right? This point here. And this is where people need to understand relevance in structure and switches are two different things. There is liquidity here. There is, of course, look at the reaction. But will it reverse from there? Doesn't mean that. Understanding the story of each structure and what engineers them will help you tremendously when it comes down to understanding the reversal point. You never want to understand and never want to take a falling knife. You always want to be in line with the liquidity or away from it. So whoever tells you that structure doesn't exist is like saying that a stop sign on the road doesn't exist because there's no cars. The overall religion, expectation, rule set, or understanding, or even popularity of the structure is so strong that it does exist. Like when you stop to a stop sign and there's no car, realistically, you can just continue, but you stop because it's the rules. It's part of the law. You are so used to it, so it actually exists. But on paper, if there's nobody in a stop sign, why would you stop? The expectation is so strong that the actual impulses make sense. Price is linear. A lot of people see this and they see a reversal here, a reversal, okay, a reversal, a reversal. They think price does this constantly. God damn it! If it was this, like nobody would be able to trade. Understand the flow. Understand the intentions. Buy side liquidity, sell side liquidity, traps, structural shift, SMTs, tradeaways. All this are relevant when it comes down to identification of your direction and where you want to position yourself. So that was a lovely 1 to 10. Took about, I think, 50% here or 80. I don't know. I have to check. But I was very happy of taking some partials here because the price played for hours after. Not my best trade. Not the cleanest, but a very free trade and a very simple one. when it comes down to understanding the story. So I really hope you guys enjoyed this. If there's anything, you let me know. And like always, catching Discord. Peace.